Hey guys, Tony here. 2023 brings to a close the third year for most AMC investors, and it was a bit of a wild ride, huh? It was a great recovery year for the box office and for AMC as well, but still one full of challenges. AMC opened in January 2023 at $36, closing the year at just $6. We had to contend with the APE ticker in addition to the AMC ticker. We had a conversion vote early in the year, then a long drawn-out court case. Then, after that was done, we had the conversion of APE into AMC. And finally, we got hit with the expected reverse split and the dilution that the company needed to raise much needed cash as the company's liquidity was drying up and working capital was becoming increasingly negative. If you've been following this channel since July of 2021, when we began, you know that I own AMC. I'm enthusiastic about movies. I go watch them at AMC all the time, but I still try and stick to the facts here. I don't give out wild price targets. I don't have any crazy catalysts, the next catalyst that's supposed to happen tomorrow or next week. We don't do that here. And when it comes to the short interest, I stick to talking about the exchange reported short interest or the Ortex reported short interest, not naked shorts. And finally, synthetic shares or FTX tokens is not really one of our talking points here. Although if you guys ask about them, I'm always happy to give my opinion about that. As 2021 ended and we moved into 2022, we were hit with rising interest rates. The entire market dynamic began to change. And it seemed to me that maybe the idea of a quick second price run up was becoming less likely. And I recognized that we needed to shift the conversation to more understanding the financials and the fundamentals of AMC for those who decided to stay in the investment. If you're in a play long enough, the fundamentals always take over. And so for me, that became an important area to focus on because no one else that was invested in AMC, like I am, was talking about it. Now, I know that type of change always gets a lot of pushback. People want to focus the talk on synthetics and market corruption, and I get that. But the shift to talking about the fundamentals, working capital, and the balance sheet was one that I decided to make for myself and you guys nonetheless, because as I said, I just didn't see enough people who actually believe in the company talking about it. If all you want to hear is talk about synthetic shares, there are plenty of other choices on social media to go listen to. If you're here for something a little bit different. Moving forward now, as we enter 2024, industry expectations are that this will be a flat year at best, and perhaps a little bit lower in terms of domestic box office than 2023. And this will present some challenges for both AMC and AMC investors. As we go over in this video, the Q4 2023 results, we're going to talk about both what is going well as the challenges ahead and how I plan to navigate them. Let's get started though by listening to the closing remarks from Wednesday, February 28th investor earnings call and hear what CEO Adam Aron had to say in closing.
I'd like to leave you with the final simple thought. 2023 was a superb year for this company on the march to getting back to pre-COVID levels of profitability. 2024 is going to be a bit harder, but 2024 is going to get a lot better starting tomorrow because Dune opens in all of its glory, and we're expecting it to be a big and successful movie. We hope you all buy tickets, go to the theater, be amused, be entertained. And as we look further beyond just this weekend, and we look ahead to the next year, which is, as I said, right around the corner, we really think 25 is going to be an incredible year for our company. Just as 2023 was the best year since COVID, we're thinking 2025 is going to leave 2023 in the dust in terms of how potentially good a year 2025 is going to be. So we're optimistic, we're confident, and we'll see you all at the movies. Thank you for joining us today.
I thought it was important that we listen to those remarks one more time because I could not agree more. As I'm looking at the slate of movies for 2024 versus the slate for 2025, I have very high expectations for the industry in 2025. And I'm looking at 2024 as more of a year that we've got to suffer through. We've got to be nimble. We've got to be smart to survive 2024. In this video, let's talk about those Q4 2023 results and do a quick comparison to start us off to the estimate I made for you guys in early January of 2024 based on my spreadsheet. For Q4, AMC's total revenues grew 11.5% to $1.1 billion compared to $990 million for the same quarter in 2022. And net loss per diluted share came in at negative 83 cents compared to negative $2.64 for the same quarter in 2022. Let's compare those actual numbers, which are listed in the left-hand column of this spreadsheet here, to the three estimates that I gave you guys in January. Those three estimates, depending on what percentage of the market AMC captured, ranging from 28%, 29.5%, or 31.6% of the overall market. Obviously, we knew the box office was $1.85 billion. We knew that at the end of the year in December. What we didn't know was what percentage of the market AMC was going to capture. It ended up being even higher than my most optimistic forecast, coming in at 33% versus my high-end estimate of 31.6%. You can see in the green horizontal bar, I had added in a little bit of extra fudge factor of $55 million for the distribution deal, Taylor Swift and Beyonce, bringing my total revenue estimate for Q4 on the right-hand column to $1.15 billion, pretty damn close to the actual in the far left-hand column of 1.104. The estimate I gave you guys in January was a rounding error off. I'm going to call that a win. When it came to earnings per share, the official number came in at negative 84 cents, including, like you see at the very top of this spreadsheet, the impairment of long-lived assets, which is not a goodwill impairment. Since I have no way of estimating exactly what the asset impairment is, I did not include that in my original spreadsheet. But if I add in that number, $106.9 million, and we look at the far right, my earnings estimate came in at negative 80 cents, 4 pennies away from the actual number. Again, this just tells me that the spreadsheet and the formulas I have in here are working very well at matching expectations to reality based on the box office we get at the end of a quarter. The only thing we have to guess is what is the percentage of the overall market that AMC is going to capture in any particular quarter. And as we know, in Q4, it was 33%. As I mentioned at the beginning of this video, and as Adam Aaron mentioned in the call, 2023 was a fantastic recovery year for AMC. There are still some challenges ahead, but let's talk about what was good in 2023. Total revenues grew 23% to $4.8 billion. You can see on the chart here a steady increase, and that is obviously what we want to see as we continue that growth curve to recovery levels of pre-pandemic. 2024, as I said, is going to be flat or maybe a little lower than 2023 due to the actors and writer strikes. So we might have a flat bar here, but we are focusing on getting to much better numbers in 2025 and surviving 2024. The net loss for 2023 improved $577 million to negative $396 million, including that impairment of $106 million to long-lived assets. And as you can see from the chart over here on the right, AMC is creeping closer and closer to getting to a point of profitability. Although I'm not minimizing the loss that is here on the chart, they are on the cusp of moving into positive territory, perhaps in 2025. In terms of the balance sheet highlighted in orange at the bottom of the left-hand side of your screen, cash and cash equivalents ended the year 2023 at $884 million. And we can see that number on the right-hand side highlighted in yellow on the official AMC balance sheet. Cash and cash equivalents, $884 million. But for all of you who think that in 2023, AMC had no risk of bankruptcy, no liquidity issues, I want you to, as Adam Aaron said in the conference call, do the math. Look at this number that the company raised in 2023, $832 million brought in, and compare it to what is left at the end of the year, $884 million. Now imagine for 1 second, do the math, what the number on the balance sheet would be if the company did not raise money in 2023. You'd be looking at about $50 million on the balance sheet, and AMC would have been foreclosed on by its lenders because they have what is called minimum liquidity requirements of at least $100 million. And in terms of working capital, $100 million is not enough cushion for the company to operate on a day-to-day basis. Working capital being the cash you have sitting right there in your checking account to pay bills as they come due. Your current assets minus your current liabilities. So for all of you that are complaining that the reverse split and the dilution sucked, hey, I agree with you 100%, but I will go to the damn mat that it was 100% required. It was necessary, or this company would have been in bankruptcy in 2023 and you would have had nothing. You would be zeroed out in Chapter 11. While we're on the balance sheet, let's talk about goodwill for a second. Some of our amateur accountants on other YouTube channels told you guys a year ago that goodwill would be wiped out from $2.5 billion, $2.3 billion to zero. And they told you again over the last 3 months that $2.3 billion would be wiped out and that AMC's income statement would look horrible due to that goodwill impairment. That simply did not happen. As I've been telling you guys for the last 3 months, it was not going to happen. These people have an axe to grind. They don't know what the F they are talking about. Just because a goodwill impairment happened to GameStop because they had acquired some businesses which were failing and they had to completely write them off, that is not the case here with AMC. You have a company which is growing. There was a goodwill impairment taken back in 2020 when there was no business, no revenue whatsoever. That was the goodwill impairment. The business units are functioning fine. They're increasing their revenues every quarter. There is not going to be any goodwill impairment on AMC. As much as these people with an axe to grind want AMC to behave just like GameStop, goodwill is not going to be impaired on AMC. Unless, of course, maybe they go into a Chapter 11. There was a impairment of assets, which is completely different than impairment of goodwill. CPAs, you know what I'm talking about. Let's talk about that for 1 second. Impairment of long-lived assets, $106.9 million. We can see in the footnotes that was related to some theaters which were impaired. Now, AMC has a bunch of old theaters still in its inventory, which they are slowly getting rid of every year as leases end. But some of the theaters which still are under lease are going to be impaired because of their age. The asset is declining in value. So there were 68 theaters in the US markets with 817 screens on them and 53 theaters in international markets with 456 screens on them. Those were the assets which were impaired on the total fleet of about 898 theaters. We had 68 plus 53 which were impaired. While we are here on the 10K, there's one other thing that we should talk about because I have been talking to you guys over the last couple months that I was expecting to see a renewal of the debt covenant suspension. That is expiring March 31st. And those debt covenant suspensions have to do with the senior secured revolving credit facility, which is a $225 million credit card. You could think of it as that the company could tap into for extra liquidity if they ran out of cash. As of December 31st, 2023, as we see here in yellow, the company had no borrowings outstanding under that senior secured revolving credit facility. They go on to say down on page 77 that the company is subject to a minimum liquidity requirement of $100 million, as I mentioned a couple of minutes ago when we were looking at the balance sheet. And that minimum liquidity requirement is a condition of the financial covenant suspension period. However, and this is good news, guys, the company believes it will comply with the minimum liquidity requirement they've got $880 million on the balance sheet through the maturity date of the revolving credit facility, which is April 22nd. What does that mean? Your credit card, you have to renew it every year. And this credit facility is expiring at the end of April. The company would normally just renew it. Not a big deal. They've done it every year. But it says in green here, the company does not expect to extend the maturity or replace the senior secured revolving credit facility upon maturity. What does that mean? We don't need to worry about any more financial covenant suspensions. We're not going to get any announcement in March about an extension of financial covenants because they are not going to renew the revolving credit facility. So that's one less worry off of my list. While we're on the balance sheet, a couple of other things to talk about. A lot of people are screaming bankruptcy imminent because AMC can't service its debt, and there is $2.8 billion coming up due in 2026. Now, those of us that have a little more optimistic outlook think that AMC is going to restructure and push out this debt. What we're looking at in detail here is $1.9 billion in a senior secured credit facility due 2026 and $968 million in the PIK toggle second lien subordinated notes due 2026. Only the most bearish people would tell you that AMC doesn't have the ability to restructure and push this debt out to a future date. And that is my expectation of what they're going to do. And I expect that they will do that at some point in 2024. While I have no way of 100% guaranteeing to you that the debt can and will be restructured and pushed out, it is my belief that it is a high probability that it will happen in 2024. Therefore, I assign very low to almost no probability that the company will go bankrupt in 2024 due to its debt. While we're talking about debt, let's take 1 minute to explain a couple of things that people often have common questions about. What is AMC's debt? What are they doing about it? Is it reducing? And how did they get here in the first place? I think this is going to be worth a minute or two of your time. If we look at the total debt bar chart, you can see in the early years prior to 2016 that the overall debt was very low. They had some of those acquisitions of other theater companies in 2016, as we know about. I'll put another graphic up on that in just a second. And then you see this huge jump at the beginning of 2019. And we'll talk about that in just a second too. You're going to want to hear this. But what I want you to notice is that the overall debt is getting reduced every single quarter. The company is using the money that it's raising from investors and bringing in to reduce the debt. When we look at a total debt chart like this on a tool like stockanalysis.com, one thing that you need to know is that this huge number, $9 billion, is not all corporate borrowings. It's a combination of debt, what I call debt, corporate borrowings. And in addition to that is the company's lease obligations. Due to accounting rules, lease obligations over the next 5 years are added into the debt that we see here on this chart. So effectively, if you're just looking at what we consider real debt, you can cut what you see on this chart in half. If we switch over to this other chart that I prepared for you guys, we can see here the corporate borrowings, actual debt is the blue line. And it increased back in 2016 with the acquisition of Odeon, UCI, and the Nordic Cinema Group. And there was a bump up there in the middle of the blue line in 2020 due to COVID and some deferred lease obligations. And slowly that number is being reduced again. What about that red line, the overall debt? When we add in the lease obligations, you can see that that line also went up with the acquisition of the different cinema groups. But notice in 2019, that huge jump. What happened? It's this same jump that we see here on this bar chart. And I think it's worth understanding that the reason that that happened was due to an accounting rule change in the beginning of 2019 ASC 842, where the accounting standards changed and companies were forced to start including lease obligations on the balance sheet. What does that mean in layman's terms? There was not really any increase in the company's debt in 2019. The company and all companies were forced to put lease obligations on the balance sheet. Lease obligations which had been here all along prior to 2019. So even though you see a huge jump, I want you to know that those numbers were there all along, and the reason that it went up was due to an accounting rule change for all U.S. corporations. Unlike what the haters will have you think, this was not some dastardly plan by CEO Adam Aron in 2019 to effectively double the debt of the company. Just an accounting rule change. Those of us that are doing real financial analysis on this company are watching both these numbers, both the corporate borrowings, the blue line, and the total debt, including the lease obligations, the red line. We're watching those numbers to come down. And yes, there's still a lot of work to go. This is one of the biggest challenges that AMC has, tackling this debt, and it is damn hard to tackle debt when you are losing money every year on an annual basis. That is why it is so important for AMC to get into a year where the box office is over $10 billion a year so they can start throwing off some income to pay down the debt even faster. If we don't get to a box office year where we're getting over $10 billion, then AMC has a different set of problems to worry about, and then some of the bearish cases start coming into play. The challenge for AMC remains free cash flow. How much cash is left after you pay both the operating expenses and the capital expenditures? That is what you have left to do things like service your debt or pay down the debt. When we have a negative number on free cash flow, you get the problems that AMC is struggling with right now. Why do we have, though, a negative number on free cash flow? Because AMC is sized to operate efficiently when the box office is over about $10.1 billion by my latest calculations. So when executives are looking forward to a year like 2025, that is possibly their first glimpse of getting into a year where the company could be free cash flow positive and not have to keep tapping the capital markets for more cash. That is going to lead us into our next topic, which I'm going to cover with you guys on the very next video, the free cash flow and, more importantly, the cash burn for AMC in 2024. We've got about $880 million on the balance sheet. How much of that is going to be used up in 2024 in light of the fact that box office is going to be somewhere between $8 and $8.5 billion based on current industry estimates? Be sure and watch that video when it comes out later this afternoon. You're going to want to hear my thoughts on AMC's cash burn in 2024 and my plans for trading AMC stock in 2024 based on my expectations of the cash burn. I am Tony DeNaro. Thank you for watching, and I will see you on the next video.